Investors and traders, welcome to the channel Market Chart Pattern. Today, the 18th of February 2025. Hope everyone had a good weekend. So the markets were closed yesterday. The cash markets, the Globex markets were open with limited hours. So today was the first day after the holiday when the markets reopened. So we'll do a recap of the key markets that we follow, how they did today. As always, this video is for educational purposes only and it's not a financial advice. So we'll start by taking a look at the US dollar. This is the weekly chart. And one of the things we mentioned was that the US dollar, when it went into this box, it was a region of resistance. For us, it was also kind of a target. Once the market actually met our downside target right here, we were watching for 38.2% retracement. Once it was able to get above that, we were really watching for a test of 107, and I thought really maybe 107 is a really key level that it might prove to be a good resistance level, but not for a long time, and went right into this 1.272 expansion and the 61.8% retracement of the stop right here to the bottom right here. So now what we are looking at is the market on the weekly chart has done a nice ABCD 1-to-1 price projection right into this 20-week moving average. There's still a chance, at least on the daily chart, we could get down a little bit, maybe 106.12 or even 106 even level is possible because we have the 38.2% retracement around here, but where we are is pretty good support as well, just because the moving average, and on the weekly we have this 1-to-1 price projection being completed right there. So moving down to the daily chart, this is the price action that we see today. So the dollar actually gained on the day. On the daily chart, I thought maybe there is still a chance it could do a 1-to-1 right like this, maybe into this region. But if it just begins to strengthen from here, then I think it's got a good chance to actually go a little bit higher. Test around 107.85 level perhaps. So that's going to be the region that I will be watching for, and the 20-day moving average is also nearby, not too far away. Now, one of the key currency pairs, which is something which we have been watching really carefully, has been this Japanese yen versus the US dollar. So we were watching for this 78.6% retracement and 1-to-1 projection right here into this level, roughly around 150.80, and we saw a really nice move which went right into the 78.6% retracement of this CD leg right here, and then we were expecting for a retracement. Now it's been a pretty deep retracement. I would have thought it would actually somewhere finish somewhere around 151.77. So but it's just it potentially could be a double bottom if this 7th of February low is held. There is a chance for that. So as long as this low is held, the chances are we could actually strengthen, and we could see this market actually, or the US dollar, gain in strength. This is something which we have seen on the dollar index. The dollar index actually gained in strength today, and there's a good chance if this currency pair begins to rise, that dollar is actually likely to strengthen. Now, if the currency pair, which is this dollar versus Japanese yen, is likely to gain, there's got a good correlation with the yields, especially the 10-year. So if we just go back to the 10-year, we can see that the yields actually rose today. However, what I was thinking was last Friday when the market closed, that we perhaps could see the yields actually move lower, because we had two consecutive fairly large days to the downside in yields. But what we have seen today is, with the strength coming into the US dollar and the US dollar strengthening against the Japanese yen, we're also seeing the yields rise as well. And if we were to take a look at this on the 10-year futures contract, you can see that this is the pattern that I have drawn, and there's still a chance we could actually still be in this CD leg here. But if the US versus the Japanese yen begins to strengthen, I think the yields will be under pressure. The price will be under pressure and the yields are likely to rise. But it's just in our trading range. This is 61.8% retracement of this low, and this has been a 61.8% retracement of this high, and there is still possibility, as long as this low of the 12th of February is held, we could be in this CD leg higher, and we could get to about 110.15 and still be a really bearish move, but there is a possibility. Otherwise, if we begin to take the lows out of 12th of February, then that's pretty bearish, which means the rates could rise pretty quickly, because this is the bearish symmetry which is still in place, intact, and that would mean, you know, an acceleration of the move for the yields to the upside. Now, if we just take a look at this on the shorter end of the curve, here we can see the yields actually rose today as well, and the long bond futures, you can see that the long bond futures also had a 0.85 nearly percentage point, almost a point move to the downside in the price, meaning the yields went up. Gold is really interesting. You can see that we had last Friday a pretty big pullback. We lost about 2.15% or $63.50 on the day in the COMEX gold. One of the key things that I had pointed out was we had seen moves like this in the past, where, you know, the market lost $45 on the 31st of October, and this was also roughly $48 12th of December, and we had, if we had a follow through, then we had a nicer pullback or a bigger pullback. So we were watching for a follow through, and we did not get a follow through today. So that is actually showing the strength in the gold market. And it's likely that what we are seeing here, this leg would actually extend if it begins to close above the 2,960 level on closing basis, and that could be a pretty strong and quick move to the upside. And you can see that the gold is already turning into a parabolic move, especially the move since 8th of December, towards the end of December 2024. And then, you know, one of the things with parabolic moves is that these usually they end in a some sort of a really quick move, or sort of a blow off kind of a move, and it looks like the gold seems to be in that sort of a movement. And if it is able to get above, close above these patterns that we have drawn here, this parabolic move could actually accelerate, and, you know, I think we can see a really flurry of gold above 3,000 then. On the flip side, if we just see how the silver is doing on the COMEX silver contract, it also had a good day, but it's just nowhere as strong as the gold is, and then there's just no I don't see any parabola here. But the possibility that it is in this ABCD move higher towards 3668 cannot be ruled out, but it really needs to get out of this congestion, and it's still below these highs of 23rd of October. If we were to just take a look at the GDX, which is the ETF for the gold miners, you can see that it has not taken out the highs of 22nd of October, whereas gold is right up in the stratosphere. So that just tells you that the demand for the actual commodity is just outstripping, and the miners are just nowhere near that. So will the miners catch up with gold, or gold catch up with the miners? That remains to be seen. But the miners looks like they have to do quite a bit of work, and at least go and make a new high compared to what they did in October of last year, 2024. Okay, so now we'll switch over to the equity indices. So let's take a look at the German DAX in Europe, how the DAX has been doing. So DAX had a very nice move when the markets in the US were closed on Monday. It had 1.26% move to the upside, and looks like a 23,000 is on the cards for the German market, 23,100, and on the in United Kingdom. We can see that we are looking at a key pattern that completed. We had a bit of a pullback, so maybe we just go sideways here. A range bound market for the UK. You can see that it just broke out of this range, so I think it's got a more upside in FTSE, but FTSE is one of those indices that where a lot of these actually the companies that are listed on FTSE 100, they're actually not UK companies, so they are more like ADRs. But it goes range bound for quite a while, and it breaks out of it. And we have seen a breakout, just the way we saw a consolidation breakout right here. It might actually can go in consolidation again for quite some time. So this is how the FTSE likes to move. Coming back to the US market, so let's take a look at the cash S&P 500. And the cash market actually made new all-time highs. Isn't that fantastic? Because this is something what we had been forecasting, and in fact this is our point C, low of 3rd of February 2025, with new all-time highs coming in. On the cash index itself, I think we could see 6,189 to even 6,300. We have the ABCD completing a little bit lower and 1.618 expansion, so I think 6,300 could be on the cards on the cash index. And the cash, the S&P 500 cash index actually made a new all-time high. And if we take a look at this on SPY, which is the ETF, we can see that the ETF also made a new all-time high. And if we were to take a look at this on the futures contract, the futures contract actually did not make an all-time high. Well, let's actually double check that. So this is the high has been 6157.75, and this was the high, 614 6,162.25. So no, it hasn't done that yet, but with the cash, I think it might play a catch up. And if that were to be the case, we could be looking at 6,245 and even possibly 6,363. With the ABCD actually completing around 6,278, so that might be the ballpark figure. I think it's breaking above this channel that we were drawing. Possibly it's got further upside to go, and those would be the targets that I'll be looking at. And if we take a look at the nasdaq cash, so this is the nasdaq cash index NDX, it has also gone and made new all-time high today. I don't like the way the candle closed today. So it was down quite a bit, well, on intraday basis, and then the buyers stepped in, but I don't like the way it closed. So let's see what sort of follow through we get tomorrow. If we begin to close below the lows of today, I think from a technical pattern perspective, that's not going to be a nice pattern. It could indicate some selling pressure is likely to come in. And if we were to take a look at this on the QQQ, the Q's also made a new all-time high, similar kind of pattern to NDX actually. And then if we take a look at XLK, which is the spider select, we don't see the kind of pattern that we see on the QQQ, but it also did not make new highs either, meaning the all-time highs. So this is how this picture is setting up. Let's take a look on the futures. On the futures, because this is when we had the rollover, I think this situation needs to resolve. So we had a day which was fairly intraday large range, but range bound. So the buyers and the sellers, they fought all day today and narrowly agreed on a closing price. So let's see what sort of follow through we get, but we are closing above the 78.6% retracement, and in that case, we could be looking at further upside targets actually. And also one thing I had mentioned was these nice rounding bottoms that is forming. Essentially, on the futures, look more of a trading range behavior. We are entering at the top of the range, but We have made new all-time highs on the cash index and also in the Qs. And it's also been one of the markets which had been stronger than the S&P 500, so maybe pauses a bit as and S&P 500 catches up. Now let's take a look at the Dow Jones Industrial. So let's take a look at here, Dow Jones Industrial. So you can see it. This is the cash market. It hasn't done much today. So that just shows you the nature of rotation in the marketplace. Remains range bound. If we take a look at this on the futures, nothing much done in the Dow Jones stocks. So the index is basically range bound, whereas S&P 500 made new all-time highs. Let's take a look at Russell 2000. Also range bound. IWM shows more strength than the futures, but in a trading range again. And last but not the least, let's take a look at the New York Composite Index. This also has ADRs, strong close today, so it's got a different pattern to Dow Jones. So that just shows you, there is a rotation perhaps, and some of these companies which are really heavily weighted in Dow Jones, because Dow Jones is actually a price weighted index. It is not a market cap weighted index. So stocks which are heavily priced, they influence the index a lot. And this one, New York Stock Exchange Composite Index, is actually a much broader parameter, because it also has foreign stocks, and some of the foreign stocks might be doing better. I can show you some of the Chinese stocks. They have started to do quite well. One of the example is the BABA. You can see that this parabolic move in BABA. I actually did a video for price targets and patterns for Alibaba. I think it still has further upside to go in Alibaba, but with a move like this, but coming out of really long consolidation, a move like this, I think a lot of people might be just getting in. So a move like this could also mean that when there is going to be a correction, it could also be pretty sharp correction. We have seen this in the past like this, but in my opinion 160 could be on the cards on Alibaba. We'll see when and if it gets there. Then let's take a look at Goldman Sachs, for example. So this is the Dow stock, and Goldman Sachs is actually flying. You can see that it's doing really, really well, posting new all-time highs. So very, very strong stock. Now let's take a look at JPM, which is also a Dow stock. Banks are doing fantastically well. So you can see this is where the rotation is happening. So I'll just show you XLF. Here we go. So XLF, you can see that pullback, really strong move now. And KRE, which is for the regional banks, yeah, it's kind of playing a catch up, but it's nowhere near XLF, because XLF has Berkshire. It also has stocks like Visa. Visa broke out of this target now. I think it's got 366 on its site. MasterCard, same. I think it's got a chance to actually go and make $600. So there you go. This is what we are looking at, that this is where the rotation is happening. It's just no longer the tech stocks. There are very select tech stocks, and Meta is being one of them. And we had really nice trades done in Meta. This is the weekly chart of Meta, which I had for months and months in advance, with 690 being the target. I'm really proud to say that the market actually met our target, not just met, but actually exceeded the target. But this is the power of these patterns, that we were able to forecast them way in advance, months in advance, and this is what the subscribers of the channel were able to benefit from the pattern recognition analysis that we do here. So if you are watching and you're not a subscriber yet, then I highly encourage you to subscribe And if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss on anything. And if you happen to like our analysis, how we look at the markets using advanced technical analysis using Fibonacci retracements and pattern recognition, then give the video a thumbs up. I will really appreciate that. And thank you very much for watching the video. Good luck, good trading, and I will be back with you guys shortly with another update with another video. So have a good day. Speak to you guys soon.